Good evening, Facebook Live. This is Jabari Long with episode number 18 of the Long Report. And tonight I'm going to talk about hard money loans. So, what is hard money? Hard money is a term used in the real estate investing arena that talks about expensive money. It's typically used for acquisition and rehab of investment properties. Um, you are an investor, you're looking to buy a property that's in need of rehab. This space is not necessarily set up for a traditional bank. So banks don't want to provide investment capital to investors who are looking to buy, fix, and sell on a typical basis, right? You got some banks now that have a niche or programs here and there that are looking to set up to revitalize certain areas. But for the most part, this in the industry was not addressed. Thus, you have hard money loans. So, what is a hard money loan? It's an acquisition and rehab loan where the lenders provide the money for you to acquire the properties, as well as a rehab escrow set aside for you to renovate the property for resale. Now, in a traditional world, if you're a homeowner, you're looking to buy a property, you have the 203K loans through FHA, and Fannie Mae has some home style programs that have some acquisition and rehab funding available. But for investors, the hard money lending is typically the go to. And it's a short term loan, right? It's typically 6 to 12 months. If you need it longer than that, then more than likely you got in over your head in a deal that you really couldn't handle. These loans are almost exclusively set up for non owner occupied properties. What does that mean? Properties that the borrower or the owner is not going to live in, right? It's set up for short term buy, fix, and sell. Now, some people say, well, Jabari, I got perfect credit, I got money in the bank, I got good income. Why would I pay 12 to 18% for a loan and pay sometimes anywhere from 3 to 8% fees associated with the loan and closing to get this money? And I always tell them the cost of the money is not as important as the availability of it. And I'll say that again. The cost of the money is not as important as the availability of it, which means if you don't have the money and deals are constantly passing you by, then it might be something to look at the hard money avenue, because although you can't keep all the money, you do have the money available to you to get the deals done. So the term hard money comes from the fees that are associated with the loan and the interest rate. That only hurts you if you're in the deals long term, right? If you get in, you get out, you handle business, you have everything lined up before you close, the impact on your profit will be minimum because it's going to be short term, hard money loan. So these loans were very popular before the market crashed. There were several lenders in the Metro Detroit area. If you had a deal under contract, you could go to them, present them with the contract, your rehab budget, and tell them you wanted to buy and rehab this home. You didn't need a whole lot of experience. Hell, you didn't even need good credit because this is asset-based lending. Asset-based lending, meaning the loan is based off the after repair value and the value add or the rehab that you're going to do to the property. That's what the lender is exclusively basing it off of. So they might ask to run your credit. However, the loan is not going to be based off of your credit. It's more than likely going to be based off of the condition of the property in the area and whether they want to loan on that property with the risk of getting it back in foreclosure if you default. Asset-based lending. So years ago, you could go in with a contract. They might charge you an application fee of $195. They might charge you an appraisal fee of $500. And as long as you pass through that process, then they would loan you the money. Well, borrowers had, $700, $800, $900 in the deal, really no skin in the game. And the lenders saw that they were getting a lot of defaults. People were mismanaging money, contractors were running off, people were cutting side deals with their contractors to keep the money and not actually renovate the house. So now, in this climate, this economic environment now, hard money is very, very abundant, right? All you have to do is Google it, and you'll find at least 20 people or 20 entities willing to lend in this Metro Detroit area. But now they want you to have skin in the game. So what does that mean? When you are looking to purchase the property, they want anywhere from 10 to 30% down. 10 to 30% of the purchase price being your skin in the game to make sure you have something vested in the deal. And then what I'm hearing is anywhere from 50 to 100% of the rehab, the cost of the rehab, they will fund, but only on a reimbursement basis. What does that mean? That means you got to go out, use your capital to get the roof put on the house, call them back out, let them inspect, submit an invoice, and they will reimburse you for the roofing work that you got done. So they're spoon feeding you the money to make sure that the money is not being mismanaged and that you are doing the rehab to the property and not, going to the dealership or Dietrich first to utilize those funds. Another way that I'm seeing that lenders are, and this is not something new, they're using cross collateralization, which means if you have an expensive property somewhere that you're willing to collateralize, then they might reduce some of the guidelines on the hard money loan. Meaning if you have a free and clear property in West Bloomfield that you allow them to slap a lien on, then instead of your rate being 12%, it might be 9%. Instead of you having to put down 30%, you might have to put down 5% because they know that they have that security over there as collateral to in the case of default. So hard money, very useful tool. I've used it many and many times. I saw people make a lot of money with it. I've seen people get into extreme trouble with it as well. It's definitely something that needs to be utilized with care, but it is something available to anybody who wants to get into the rehab real estate investment business, the fix and flip business. As I said before, it's not based off income, it's not based off credit, it's not based off of experience, so to speak. Anybody who wants to get into the fix and flip game can do so with the hard money loan if you structure the deal properly and have all your ducks in a row. So once again, this is Jabari Long with the Long Report, episode number 18. You all enjoy the rest of your night.